Okay, welcome back to Climate Finance and the Carbon Markets, broadcasting from Hong Kong University of Science and Technology. Today, we're going to talk about the corporate side, demand and the dynamics around the carbon markets and the evolution that is currently we're watching in terms of carbon markets and the corporate interests in them. Today's guest is Duncan Van Bergen, who has a terrific backstory that I'm going to let him introduce to you, but you'll soon figure out why I've asked him to come on the podcast and talk to us. Duncan, a lot of what we generally do is start with what's called the hero's journey. You're the hero. What's your background and how did you get here? What's the process that's led you to the place you are today? Give us a little bit of that story.
Hey, thanks, Charles. Thanks so much for having me. I need to just bring this conversation down a few pegs immediately. I like the hero thing, but I don't think I'm going to be able to live up to that. But by way of background, Charles, I spent more than 20 years of my career so far in the energy business. I worked with Shell for a long time, and I worked with McKinsey also in energy. Always on a variety of challenges related around either building new businesses or running them. I worked in mergers and acquisitions and business development in running large assets, including large assets in the legacy oil and gas business. What is probably most relevant to why you decided I was going to be part of this series is I spent 4 years from 2017 to 2021 building up Shell's nature-based solutions business. And that was a unique and fascinating opportunity. I somewhat got lucky in it. I had come off of a long and arduous assignment in Kazakhstan in the more traditional oil and gas space, and I decided that for my next career challenge, I really wanted to have something to do with newer and more renewable energies and addressing the world's enormous climate change challenge. And I made it clear that that's what I was interested in. And just at that time, Shell, being an energy company, obviously having a big stake in trying to figure out how it was going to continue to stay relevant in a lower and ultimately post-carbon world, we're starting to look at the role of carbon sinks and specifically natural carbon sinks, trying to figure out, is that something that made sense for Shell to be a participant in? And I got the opportunity to look into that and basically was asked a number of questions. Was asked, hey, is this, because it was just about the time where on the back end of the Paris Agreement, there was an increased level of interest in nature as a carbon sink. And I was asked a number of questions like, is this real? Is this really so big? And is it material in terms of what it can do in the overall climate story for the world? Is it investable? As in, can a corporate invest in this space? And thirdly, is it something that makes strategic sense for Shell? And I spent a couple of months with a great team of people in Shell looking at those questions, and then ultimately came back to the executive committee and to the board and said, well, you asked us 3 questions and the answers are yes, yes, and yes. And it's very strategically relevant. It can really be impactful. It makes sense for Shell. It makes sense for Shell's customers. And maybe later on, we talk a bit about scope 1, 2, and 3 and relationships across the value chain. But anyway, the answer was yes. And I got the opportunity to go put Shell's money where my mouth was, and got given a relatively open charter to build a business. And so that became, over the course of 4 years, Shell's nature-based solutions group, where Shell became a large and meaningful investor on a global scale in nature-based carbon projects, and also developed on the back of what was already an existing presence in compliance markets and compliance carbon markets. Shell built a trading and marketing business in the voluntary markets on top of that. And that too is a material presence globally. Shell's team is one of the bigger teams in this space. So that's the background. Now there is another transition, and then I'll stop talking about the not quite hero story. But I noticed in the 4 years of building this business together with our team, how much time we were spending on the topic of quality. We had, from the get-go, made a decision that what we invested needed to be meaningful and needed to survive close scrutiny in terms of, hey, is this actually contributing? And so we found that in addition to being selective about which type of credits issued with verification from, again, making choices around which type of standards we would buy credits from, that we needed to do additional due diligence, apply additional scrutiny. Again, because we entered this space as Shell in a very big way, we were fortunate that we were able to build a technical team in-house. But as more and more companies started entering the carbon market, I figured, look, this is not sustainable. This doesn't make sense for everybody to have to build out their own capacity. And I said, if carbon markets really are going to have impact, we need to provide, well, more people need to have access to the type of insight I was starting to get access to at Shell. And out of that was born the idea of creating a service that we would make available to parties entering carbon markets wanting to buy and use carbon credits. And that became Calyx Global, a company I co-founded a bit over a year ago, and to provide that service to buyers and users of carbon credits, to allow them to know that the credits they were looking at using actually had real impact on climate change and possibly also on other areas. So that's my little story.
That's a great story, and I know that now that I chose the right guy. That's a rich background and experience to unpack a little bit. Let's do that. First, I want to kind of go back to the sort of the early notion of the Shell process, which is nature-based solutions. Can you define sort of what, just for the audience a little bit who may not be up to speed on all of these terms, what is a nature-based solution for climate? Where does that term come from, and how did Shell think about it?
The nature-based solutions, sometimes are also known as natural climate solutions, really refers to a set of activities or interventions you can make investing in nature to support its natural capacity to sequester carbon in nature. Yeah, nature in its normal life cycle. And again, this is not at all in the area of climate engineering. This is just allowing nature to do its natural job. Nature absorbs CO2 as part of its growth cycle, and it's basically taking actions to allow that to grow. And it can be investing in ecosystems, protecting ecosystems from being degraded or disappearing or being destroyed. It can be improving the management of ecosystems, like managing forests in a different way so that they are more resilient and are able to absorb more CO2. It can also be creating or recreating ecosystems, creating or replanting forests where forests were removed or degraded over time, restoring that, or even adding ecosystem where there wasn't ecosystem, so creating new forests or growing mangroves and things like that.
And one of my former colleagues at the Nature Conservancy was the author of a fairly influential paper on this, and essentially said that the climate solution, in terms of sequestering carbon to get us down below the level we need to have a healthy climate and planet, of the whole pie chart of the climate solution, that probably 25 to 30% of it is really maintaining and managing and investing in those nature-based solutions, which I think is a pretty compelling reason to go at it. I mean, and I think that was also subsequently everybody's discovered is it's a lot cheaper to keep and manage nature than it is to try to suck carbon out of the air. Was that one of the rationales that?
Yeah. So one of the rationales indeed was this is a big opportunity. And indeed, your former colleagues at the Nature Conservancy did some of the seminal study work together with a whole bunch of other scientists. But I remember this paper by was it Bronson Griscom? What was it, 2016 or 17 paper?
Yeah.
That spoke about, if I'm not mistaken, something like 11 billion tons a year of incremental sequestration potential at less than $100 per ton. And if you remove the cost constraint, it went up to over 20 billion tons a year. Now, obviously, in the actual doing it, there's a lot of practical considerations, but yes, it is very material, was one consideration. The second consideration was investing in nature doesn't only provide all these, this vast potential climate mitigation lever, but it also potentially contributes in such a vast way to livelihoods, to biodiversity, to watershed protection, and so on, that it's almost impossible to quantify just the size of the benefits. And yes, cost plays a role, but let's bear in mind, and I think that's what's so interesting about the course you're working on, is markets will also have an impact. Yeah, ideally, because people recognize that this is a lever that can be used, it will lead to an increased demand for carbon credits, which will lead prices to go up. So there's obviously a market dynamic. I think to say it's cheap is probably different than what I would put it as. I'd say compared to some of the other near-term options we have to do something about CO2 concentrations in the atmosphere, this appears to be at a cost level that you'd say, hey, let's find a solution to make this part of the mix.
Yeah, it's a better bang for the buck, I guess, would be the other kind of way to say it. And so Shell and others in the kind of the traditional energy world started thinking about this as an investable asset, essentially nature becoming an investable asset, because we essentially have to have the ability to keep that carbon in the forests and add more carbon in the stock of nature. So that's the sort of rationale. And it seems like Shell was probably in the forefront of that, and probably thanks to your research and creation of the program. Is that fair to say, or are there other players out there that were thinking about this as an investable kind of asset?
As an investable asset, yes. I think around 2017 is when, we were probably among larger corporations and an early entrant. I think credit should go to where credit is due, which is there were a number of both NGOs as well as smaller entrepreneurs who saw this light significantly earlier and who were part of kind of pioneering efforts around trying to see if market solutions would work. And so there had been quite a few attempts and some successes at smaller scale to try and make this work. I think one of the earliest red projects was probably a project in Chile by the Nature Conservancy, and there were some projects in East Africa that they didn't find market that easily, which is an interesting observation. Which is today, if you look at carbon markets, everybody will say, it's so tight and there's no supply and there's so much demand. And it's easy to forget that just 2 years ago, this was a market. This was a market where people would say, but there's some really good projects, but there's nobody buying this stuff. Yeah. So it just shows that things can change quite quickly.
Right. No,
it's struggling a bit with my setup here, but
no worries. So I wasn't really planning on talking about this supply side and the trading side, but it's really interesting, that background and your history around this. the other side of the corporate interest in this really is in the offsets and essentially offsetting their carbon and doing it in a cost-effective way. And that obviously is where the voluntary carbon markets come in. And we've touched on in previous podcasts the differences between the voluntary and the compliance markets. But the voluntary markets really are driven by this corporate demand that is not regulated, not required in any way. Where is that coming from? What's the sort of why do people want why do corporates want to offset their carbon? Just at the very basic level, what's that motivation?
Yeah, at the very basic level, if you'd say, okay, well, what's the root cause for this growth in demand? I believe and I hope that it is societal change, that it is ultimately mostly driven by a consumer expectation, a citizen expectation that more needs to be done about climate change. I think there is an under-recognized, broadly shared desire to see action that then drives, in some ways, consumer preferences, both in terms of how they buy and who they buy from, but also in terms of what they expect from corporations as corporate citizens, as citizens of society, that they expect action. That, together with a push from investors who, for reasons, again, driven a bit by society's expectation, but also an expectation that, look, this is happening within a regulatory framework where companies are going to be subject to more and more regulation around emissions, et cetera, are demanding action from corporates. And that's leading to corporates making pledges around being either carbon neutral or climate neutral or net zero. And I don't know if in this class you guys have an opportunity to dive a bit into the differences between these, because they are hinting in the same direction, but they are subtly different between them. But those pledges are then the next level of driver. And then when companies look at, well, hey, how am I going to fulfill my climate strategy? And a pledge like that is just one exponent of a climate strategy. They then start looking over, well, what are the levers? Yeah, ideally, a company takes a very structured approach to this. Yeah, in terms of saying, well, first, let's figure out in our A to B journey what should B look like? What do we want to be? What does carbon neutrality mean for us? Is that something we do for our consumers? Is it just because it speaks to our values as a company? Is it because our shareholders want it? Are there other stakeholders? How does it interact with our regulatory obligations? That creates an umbrella for a sustainability strategy, for a climate strategy. And then as you start going from that kind of, hey, who do I want to be in that point B, and try to make that more operational and say, well, how do I get to that point once I've defined what that point is? And companies start looking at, okay, well, what is my footprint? What is causing the emissions? Where do they come from? What am I most exposed to? What am I most accountable for? And then they start looking at, okay, well, what levers do I have to do something about it? Where is the biggest bang for the buck in terms of my own emissions blueprint or footprint? Yeah. What a lot of companies find is, hey, look, there's something around how I purchase energy. Yeah, and that's how Shell was connected to a lot of its customers. Yeah, Shell's energy sales to its customers are often part of a significant part of a customer's emissions footprint. Okay, what can I do about that? Can I buy green energy, renewable energy? Can I switch modes of transportation in terms of what I buy? Can I adjust industrial processes so that I have fewer emissions as part of an industrial process? What else can I do? If I'm a tech company, what do I do about my server farms? Where do they procure their energy? Can we do anything in terms of capturing the waste heat? So there's all these, it takes quite a bit to have a good understanding of what it is as a company you have as an impact on climate and possibly on other primary ecosystems. and what can I do about it? Now, it is possible that you then start finding levers and say, okay, we can do this, we can do that, we can do that. What you then see is that a lot of companies realize, hey, I'm wanting to make a pledge to achieve a certain milestone by, say, 2025 or 2030. And yes, I'm doing all these things, these hard things in terms of changing procurement of energy, changing industrial processes, changing logistics, etc. But I can't get to the commitment I want to make. I can't get to net zero, or I can't get to carbon neutral or climate neutral. That's where carbon credits can then play a role in saying, look, I have a residual emissions of, I don't know, call it 10,000 tons a year, and I want to get to zero. I can compensate. I can use offsetting. That's where the concept of offsetting is, to say, look, I did all the hard work that I can, but here is a so-called emissions tail of 10,000 tons per year, and I'm going to buy 10,000 carbon credits, because as you know, one carbon credit is supposed to stand for 1 metric ton of removed or reduced emissions. And so that's where the term offsetting comes from. I have a positive emission of 10,000, I buy 10,000 credits, and that equalizes to zero. But I would be remiss if I don't emphasize strongly that offsetting in and by itself is not a climate strategy. Now, offsetting can only ever be a part of a climate strategy, because it can't be used as an excuse to punt the problem forward or to kick it in the long grass. My strong belief, and this is me speaking on a personal capacity, is that it only makes sense if corporations look at the overall comprehensive climate strategy and really have solid plans in place in terms of how they can reduce the absolute amount they emit. And I think that's quite important to emphasize as part of this discussion.
Well, I think that's a terrific explanation, I think, about like what's going on in the mind, right? So driven by public sort of opinion and investor opinion, and in some cases listing requirements and other sort of board pressures, companies are basically saying, what are we doing? How much are we emitting? Let's figure out what we can ratchet down, both in our own activities and in the supply chain. And then let's offset the rest, and let's do it right. So I think you've really done a really lovely job of kind of articulating that kind of thought process. And it's now getting kind of codified, or codified is not the right word, but it's memorialized anyway in a number of initiatives like the Science-Based Target Initiative and another number of other kind of pledges, and corporates are making pledges, signing up to these things, and essentially putting themselves on the line, on the record, as saying, we're going to be carbon neutral by 2025, 2030, et cetera, or carbon negative, or even, some of them are even saying we're going to erase all of our historic carbon emissions, which I think is we're going to do better. It's nice to have companies in a race to do good stuff like this. Now, how real do you think that is? So here's a big question for you. You are in the corporate sector. You're still in the corporate sector. These are pledges that are not necessarily binding, but they're certainly out there in the public. How much do if hard times come, another crash, how much do these things get pushed down the track?
It's a great question, Charles. And I'd love to say, hey, look, guaranteed, this, you take it to the bank, this is going to happen. But obviously you are fundamentally right. These are voluntary pledges in most cases. I do believe that today's shareholders aren't the shareholders of yesteryear. Today's consumers aren't consumers of yesteryear. I think the pressure and the expectation is real, and whilst we will obviously have economic cycles, I don't think the concern people have around climate change and the impacts is going to diminish fundamentally on the basis of fashion or other concern. And so I think the pressure, and this is where there is a very symbiotic, or at least mutually supportive role between civil society and corporations, is that there will be parties who are going to hold corporations to account on delivery against these. But I think that's an important role. I think civil society is going to have to play a role. And I also believe that bit by bit, there will be increased mandates, regulations with regard to corporate activity and how that impacts climate. So my hope is that those elements of pressure, and also a discovery by companies that lower carbon business models make good sense economically in their own interest, that will continue to be sources of pressure to fulfilling on these demands. It's interesting you bring that topic up. There's an interesting parallel between that and the Paris Agreement as well, right? The Paris Agreement, which I think anybody concerned about climate should hope that it actually delivers on its potential. It's good to note that too is a voluntary, non-binding agreement between countries. My hope is that those factors will help.
Right. Which are more likely to default on their promises, countries or companies? I guess it's an interesting problem, right?
Yeah, no, absolutely.
One of the things I don't want to keep you too long, Duncan, and we've touched on some really interesting topics, and we haven't really completely unpacked them. But what I was wanting to do was to sort of bring up the idea of what's going to happen in this industry, in this world of carbon, of carbon markets, climate finance, carbon accounting. Where do you see, a lot of our audience are looking to get, put their own shoulders to the wheel on this and to put their efforts and professional efforts into figuring out how to solve some of these big problems. Where do you think some of those job opportunities for, young graduates from university, master's students, et cetera, people with science backgrounds or social science backgrounds, where do you think the jobs are in that? You've mentioned a few. I think the accounting and reporting and and that sort of thing. What are the other jobs that are out there that people are going to start doing? What's the new economy look like in the carbon world?
Yeah, look, I'll answer the question in two ways, but both ways lead to the same outcome, which is go there. This is an area of opportunity. I don't think there will be as big an area of opportunity like this. This is a generational in terms of its size. But I'll give you the micro answer, which is all these different pieces of both problem and opportunity we've spoken about in the last 25 minutes. All need to be resolved. So companies need to understand their footprints, which is both an engineering and an accounting challenge. Companies need to figure out if and how they make environmental stewardship part of their proposition to customers, which is a marketing, communications, and business development and brand management type challenge. So every part of the enterprise is being touched one way or the other by understanding the challenge, finding ways in which to resolve it in an economically feasible way, and seeking the opportunity this presents in a competitive setting to distinguish one corporation from another and saying, look, we've embraced this, we've made this part of how we do business, and therefore we deserve your customer loyalty. So that's the micro answer. There's just every part. It's a bit like for the last 10 years, people have gone absolutely nuts about digital. This is, in my mind, way bigger than digital. And I've heard some of the people in the big consultancy say, look, this is way, way more important. It's going to be way bigger than digital. The macro picture of this, and it leads to the same answer, is to say that everybody who's chosen business as part of their career have all grown up with, there's these key ledgers where we take account of everything we do in a company. It's the balance sheet and the P&L. We've gotten used to saying there's this financial metric for everything that's being done in a company. But what I kind of see is, here is the carbon ledger. the carbon footprint, or you can call it the carbon balance sheet or the carbon P&L. And on that financial side, we've gotten used to the fact there are hundreds of thousands, millions of actors, from banks to funds to all kinds of intermediaries. Everything you could possibly dream of, there's a party doing it and creating value, moving stuff left and right and center. Go back to that carbon side, and it's still relatively empty. It's a bit like it's like a new planet. And there's a couple hundred companies, and I work for one, and there's this bunch of others. But other than that, it's kind of a new planet. And so if you believe that for the planet and society to survive in the way that we know it, that too will need to be managed and transacted and reported. And that means that there is so much opportunity there. Anyway, I thought I'd give those two different perspectives.
That's a fantastic analogy, that the planet carbon, which is undiscovered and still needs all of those, essentially infrastructure, right? It's an industry infrastructure on how do we save, how do we grab carbon out of the air? How do we restore ecosystems? How do we, work with corporate sector and how does the corporate sector, what their role is, what the government, the regulatory side of it. Really fascinating. To see that kind of that new planet, really, and from an exciting opportunity perspective, I can't imagine a better way to kind of to jump in to an early career. Tell us a little bit about one last question, because I am running I'm running you longer than I promised. Tell us a little bit about Calyx. And you mentioned it earlier, essentially the notion that corporates needed to have a sense of what they were getting into when they were, making investments in offsets and what sorts of projects. Tell us a little bit about sort of the what you do. What does Calyx really provide to the companies that contract with you? What's their motivation to come forward to you? And then how do you actually think about a carbon project in a sense that, gives them a deeper understanding than what they can find in the documents that are online, for example?
Yeah, look, I'm conscious of the fact that we have a limited amount of time, but let me say a couple of things. Let's just assume, without repeating everything we said about why companies consider buying carbon credits and offsetting as part of a climate strategy. Let's say they've gotten to that point. What they want is to make sure that if they're going to use carbon credits, these carbon credits actually have the impact on the environment, possibly on other areas that the carbon credit says, hey, we do something for livelihoods or other sustainability goals. They want to make sure that if they're going to buy these credits, that they really do what's advertised, that they really stand for 1 metric ton of reduced or removed emissions, and that they have the other impacts on society or on the planet that are claimed. What we see, and I think what most people in this space, in the carbon sector, would agree on, is that it's really hard for a buyer of carbon credits to know for sure, even though these credits may come with a certification from a standards body. Practitioners find that there is still significant variability between credits insofar as, do they really stand for what's written on the label? And so for corporates who really want to make sure that they have that impact, and another motivation is for corporates who want to avoid being, having this so-called egg on their face in terms of ending up buying a lot of credits that then end up being shown by a report or media report or an NGO analysis to not have the impact that was promised. They want to be able to do additional diligence, additional screening, to be able to make sure that they don't end up buying credits that don't withstand scrutiny. And so the service we provide is we give our customers that assurance that we've, as an independent party, taken a look at at the likelihood that a credit really stands for what it is supposed to stand for, which is 1 metric ton of reduced or removed emissions. And if they make certain claims on impact on sustainability goals, that those are actually based on real substantive impact. And so that's the service we provide. We are an independent party. We take really great care that we don't get into any conflict. So we don't buy or sell. We don't recommend, say, hey, these are our top 100 for the month or anything like that. We try to provide buyers and users of carbon credits that independent service of saying, hey, we've looked at it in quite some detail, look for evidence to support that inherent integrity. And we look at a number of different quality parameters, and we do that consistently, regardless of whether it's a nature-based credit or a credit based on industrial processes or landfill gas, methane capture, and so on and so on. And that's the service we provide to our users. And it's really exciting because we're seeing that there is a growing number of participants in carbon markets who want that additional assurance.
So so you're basically a colonizer of this new planet, carbon, and you've landed and you've set up shop and how's it going? Just in a sense of like, do you have a fair number of customers and high level of interest in this?
So it's a really exciting. It's interesting you put it in that way of landing on a new planet and trying to provide in that planet a piece of infrastructure to make sure that we go about it collectively in a prudent manner. I think that's what we see our role as being. And yes, it's exciting. We've been able to work with a growing number of customers, including some other pioneers in this space, new participants, investors in this space, but also some large, very established, gigantic tech companies that want to make sure that for the portion of their sustainability strategy that includes offsetting, that they do it the right way and have been willing to invest in making sure that they get the best possible information. And we see growing demand from brokers, investors, large corporates in tech, in finance, in energy. And yeah, we're in that startup world where whilst we are providing that piece of key infrastructure on planet carbon, as you called it, at the same time, we need to build our own infrastructure because we've now proven that we have something that can actually help our customers. And we want to make sure that we can do that at a growing scale. So it's a really exciting time, Charles.
Well, that sounds to me like you're a very busy man and have a very busy team. And full disclosure, in my other job as Carbon Growth Partners Chief Impact Officer, we do contract with Calyx for the background information and assurances around quality that they provide us, and it's a terrific product. So my plug for you as well, for Calyx and for you, Duncan. We get a lot of value out of your insights and your team. Really, your team is a terrific group, and so you should be proud of putting that group together in such a short time and getting up and running.
Thanks, Charles. It's really great to talk about these topics, and I've really enjoyed it.
Yeah. Well, thank you.
If students want to find me, I'm sure they will.
Yeah. We'll put show notes together with some references and some websites and whatnot. And I know you're on LinkedIn, and I'm sure that some of my students may be knocking at your door at some point. Well, thank you so much, Duncan, for being a part of this.
I've enjoyed it. I really have. I wish everybody good luck, and we need great people to join this journey. This is the challenge of a generation or two.
Absolutely. Well, that wraps up our most recent episode of Carbon Markets and Climate Finance. We look forward to connecting with you all again soon.